What's up, everyone? It's Eric from Option Edge, and I'm coming at you late night Sunday night. And today I didn't want to talk about anything specific, nothing about the markets really, or any specific trades. But today I want to talk about my journey as a trader, as an investor. Because I got a couple comments on some of the videos asking, sort of probing, my experiences and stuff. So I figured I would make a video just talking a little bit about what I've experienced and sort of how I've come to do things and why I've come to do them. So let's begin. So when I first got out of college, which was, I don't really exactly want to say when, but I started just buying just putting a little bit of money here or there. Like I'm throwing $100 onto this stock, onto that stock. About maybe I read something online. A lot of it was green energy, things that were like sexy. So I didn't really know what I was doing, but that's what I did. And it wasn't until 2017. I was actually living in San Diego at the time, and I happened to be friends with a couple of Navy SEALs, believe it or not. And all of them were talking about Bitcoin and cryptocurrencies and Ethereum and this and that and Litecoin. And I was like, okay, I sort of hopped on the bandwagon with these guys when Bitcoin was back at $2,000. And a couple months later, it went from 2,000 to 20,000. Okay. And when that happened, a sort of switch went off in my mind. Like, hey, this is how wealth, you can make some serious money doing this. What if you had put 10,000? What if you put 25,000 and it went up that high? Like where would you be now? So from there, I started to get into altcoins, trading altcoins. Believe it or not, I ended up losing some money doing that. I probably would have been better off buying just more Bitcoin because 99% of the alts are trash. But anyway, so I was doing that, got my feet wet in cryptocurrencies. And it wasn't until maybe a year or so, year and a half later, I stumbled upon a guy's Twitter account named Ophir Gottlieb. Okay. Ophir has... he is the owner of the back testing software. He's the creator of that I frequently use on my videos. And I found his account on Twitter and watched. He had a video pinned to his profile talking about how with options he can like statistically get great returns. So he had like a 30-day trial. I tried it out, and first couple trades that were suggested, I took them. And what did you know? I made a couple $100 here or there. I'm like 3 in a row trades. I made like $300. I was like, geez, I just made like $1,000. This is great. Like, what if I could just keep doing this? Heck, maybe I could quit my job and just do this. Of course, that was a little bit of beginner's luck. It's not that easy. If it was that easy, everyone would do this. But from there, that was another light bulb hit my mind. Like, hey, maybe you should start looking into this more. So from then, that was around 2018. So I've been doing this for close to 4 years now. And every day, I learn a little bit more. And so at first I would start my strategy wise. At first I would start doing, I would just buy long calls. A lot of times I do pre-earnings long calls, and that tended to be a winning strategy. And then it stopped winning. And then I was looking for how do I hedge my risks? And then I got into diagonals. I got into call spreads, and I made a video about call spreads. I'll link to it up above. And I talk about how call spreads, basically, debit spreads or diagonals can help reduce your risk, reduce theta risk, reduce your break-even point, increase probability of profit, all that stuff. So I'll link to that. So that was sort of the next step in my trading progression. And then what I found was I would do a lot of trades in tech. And then I started saying, hey, I'm pretty overexposed to tech. How can I hedge? Okay. So then I started looking at sort of, instead of individual trades, I started getting into, how exposed is the overall portfolio? Okay. And then I started selling options, selling call spreads, put spreads, being a net seller. And the reason why selling options is actually, you can have being a net seller of options is a great edge, because if you do that, if you're basically, this is the idea, is that when you sell options, when you're selling premium, risk premium tends to be overstated versus what the actual risk ends up being. It's implied volatility is often 90% of the time overstated compared to what the realized vol actually is. So if you let's say you sell a naked call for $2, okay, because the implied volatility is at 50%, but in reality, after, let's say, a week later, when we want to look back at how that option or how that stock actually performed, the implied volatility was really 30%, and the option contract, instead of being priced at $2, should have been priced at $1.50. So that's sort of where your edge can lie as a option seller. So I got into that. I started looking at being an option seller of high IV stocks. Why? Because IV, implied volatility, tends to be mean reverting, meaning if it gets very high in a particular stock, it tends to revert back down. Okay, so that's how you can have an edge selling options. And then other strategies, in addition to selling options, specific strategies like iron condors, and then also strangles, naked strangles, are, for me, I'm starting to learn that is like the king of all option strategies, because you get to if you're exposed, you're completely exposed naked to the Greeks. You don't have to buy an option below it. So if you're, let's say, a put credit spread, you're selling a put, but then you have to buy the put underneath it. And that sort of screws. If you have a high implied volatility stock and you want to sell premium, you're also buying premium too, because so you're buying premium. So being naked is actually one of the things I am starting to do. The downside to that is you have a lot of risk. You have unlimited risk technically. So that's sort of where I'm going, and I'm more looking now into the overall risk and the overall, like, how exposed I am as a whole, a total. How exposed is my whole options portfolio? If I buy a bunch of stocks that are make up a big part of the NASDAQ, or buy a bunch of options that make up a big part of the NASDAQ, and then the NASDAQ crashes, well, then I'm screwed. So that's sort of how I am starting to look at things. I'm thinking, hey, how can I hedge and stuff like that? So that's sort of my journey as an investor and trader. Started with small stocks, then into crypto, and then from crypto to options, and then with options, I started with long calls, and then you start with some spreads. Then you get into maybe iron condors and strangles. So and then also looking at your portfolio as a whole. And it seems like the top guys, the guys that are the real pros at this stuff, know exactly what their portfolio, how much risk they have, and all of that. So that's where I'm trying to head, and I, every day I learn a little bit more. So it's pretty interesting. It's one of the things where the more you learn, it's almost like not many things in the real world, if you're smart, does that automatically equate to making more money. But I feel like when it comes to the markets and finance, just by learning more and having more knowledge about it, you can directly make more money, which is pretty cool. So that's why I keep learning. Anyway, have a good Sunday night. If you're enjoying this stuff, like and subscribe, and follow me on Twitter if you want to see live trades, and you don't have to wait for me to put out the videos. And so follow me on Twitter if you can. Peace out. Bye-bye.